Hello, guys and girls. It's a bright new weekend, and welcome into a bright new weekend. Okay, this is Astrofair Trading Limited, and I want to believe we had a profitable week. And my prayer for every trader out there is that this coming week is going to be a more profitable week for us by God's grace. Okay, so guys, as our custom is, as our routine is as a trader, we keep doing our analysis during the weekend and watching out for the opportunity against the coming week. If you do this as a trader, what you are doing is you are staying one step ahead of the market, which is actually good, so that when market opens the coming week, you are going to have a stress-free trading week, which means that you will have actually bring out all the pairs that you're watching out for and put them on your watch list, so that you're going to see those that are that has the potential of giving you good profit before the week open. So this is very important, guys. If you have not been doing this, this is what you should be doing as a trader. Do your analysis during the weekend. Focus on the pairs that has potential to move in a specific direction. So by the time you get into the week, it's going to be uh, sweatless for you guys. So this is very important. Okay, so guys, I'm going to be walking us through a particular pair this day, and that is Australian dollar, US dollar. I was just doing my weekly analysis, weekly outlook, and I came across this pair, and I wish to actually share with us. And what I'm going to be using here is purely smart money concept. So if you like what we are doing here, you can incorporate it into your own trading system. It is not necessary that you use our strategy. So if you have a strategy that you use that works for you, it's okay. But if you see what we are doing here as a very good thing and you think it's something you can actually learn, why not? Just make your research on it. And this is very clear. Everything you're going to learn here is for analytical purposes only. So we are not responsible for any loss sustained during your trading activities. And guys, lastly, you must make sure that you are actually managing your risk well, because risk management in trading is what is going to sustain you as a trader. So do not just use a random lot size. Make sure that you calculate your risk. If you're risking 1%, you're risking 2%, 3% of your account, make sure that it is well calculated, because it's a business and you have to actually calculate what the amount you are willing to risk before the amount you are willing to take from the market. That is very important, guys. Okay, so guys, let's dive into the chart to see what we have on Australian dollar, US dollars. Okay, so for a while now, this pair has been dropping. The price has been falling, and of course, we know that it is the price of the Australian dollar that is actually falling against the US dollar, because we deal with the base currency anytime we open the chart. If you are buying the base currency. If you are selling, you're selling the base currency. Let's put that in mind, guys. Okay, so price has been dropping for a while right now. So I'm going to start from this top here. I'm going to be marking out that top. That's a high, and from that high we see that price has been declining, and in the sense that we have series of lower lows and lower highs. A low, a high, a lower low, lower high, lower low, lower high, and a lower low. Now, it will interest you to know that if you are in a downtrend, the first thing you want to see is that every pullback is actually a uptrend. In a downtrend, every pullback we have is actually a uptrend. It's a mini uptrend. So put that in mind. So you are going to be working with both the trends and the pullback, both the impulse and the pullback, guys. So now, following market structure, you will agree with me that price has been dropping and has been breaking structure to the downside. So right from the top here, we had a break of structure right here. There was a break of structure. So there are places we have break of structure again, right here, another break of structure. We got another one right here, a break of structure, right? So we keep getting break of structure to the downside until we have this one last break of structure here, and the last break of structure is what we want to be dealing with. So now when we have a break of structure like this, the high that was responsible for the break of structure is of utmost importance to us, the highs and the low, and that's what we call our swing structure, swing high and swing low. So now the high that was responsible for the break of structure here, the last break of structure, is going to be this high, and that is what we call the origin of the move. Then that move went down this way and break structure, and everything within that move are going to be fractal nature. For those of us that understand the fractal nature of the market, so market moves in fractal. In this case now, we had a break of structure, so we're going to be dealing with this high and this low. Very important. And do not forget, guys, that in this concept, the function of every high is to take out a low. Please put that in mind. If a high is established in a downtrend, the function of that high is to take off the most recent low. So now the function of this newly produced high right here is actually to take out the low right here. So that is our focus. So our focus is that this price is possibly going to go down and take off the low, as we can see. So now if that happens, then that high becomes a protected high. So the first one that happened here, this high is going to be our protected high right here. This high right here is going to be our protected high. That means the smart money guys are going to protect this high. But in the case that that high gets taken out, so it means that there's already a shift in market structure. Don't forget we are dealing with one of the highest time daily time frame, that is the daily time frame. So we have a swing high here. Then this is going to be our swing low right here. We got a swing low, and now since we have a swing low, this particular high is going to be our protected high, which means that if the price is going to continue lower, price should not take off this high. So the high is protected, and we want to see market pull back into some levels. When you look left, market is going to pull back into some levels before it continues to the downside, and those levels are our area of interest or point of interest. It could either be an FVG, a supply zone, an order flow, or an order block, whichever one it is. So now all I need to do now is let's open up this high to see which of these ones the market actually came into. Now this is very interesting, guys. We have series of bullish candlesticks here. You can see these are all traps for people that are buying this market. We have series of buy candlestick, and everybody think this market is going to continue bullish, and all of a sudden the bullish character changed to bearish character, and there was a change in trend. So now all of this bullish move from here to this upside can be regarded as our order flow, because that's a series of candlesticks that was responsible for a massive sell. Series of bullish candlesticks, initial bullish candlesticks that was responsible for a massive sell. So in this case, we can actually mark all of these as our order flow, but I'm not going to be doing that. What I'm going to be, because we're on a daily time frame, I'm going to be picking just one of these candlesticks, this particular one, the last bullish candlestick, because if you go down to 4 hours, this one candlestick is actually 6 different bullish candlesticks, possibly in a 4-hour time frame, and on 1-hour time frame is going to be multiples of candlestick. Guys, we need to get that. So now I'm going to project this forward to see if price really mitigated that order flow, and let's see the reaction inside this order flow. So I'll push price forward, or push the rectangular box forward and see what happened. And we had it. Price came into that zone, just tapped into it, and immediately rejected. So I'm going to label this as our order flow. That's a whole F. So price entered into that, and immediately there was a reaction. And not that alone, immediately price entered into it. Let's see, I'm going to zoom in to see what happened. So now we got a bearish engulfing candlestick pattern. That's the first sign that you can see here. A bearish engulfing candlestick pattern followed by this bearish candlestick pattern. Now we know that the sellers are actually in the market now. So now, not that alone, don't forget I said something at the beginning of this analysis that in a downtrend, every correction or every pullback is going to be a uptrend, but it's just a mini uptrend for us to observe as well. So now we need to know when that uptrend is also ending by observing a shift in market structure. Now, how do I mean? Let's start with this. We got an impulse, a correction, impulse, a correction, impulse, correction, impulse, correction, impulse, correction, and impulse, and we got a shift of market structure. Now notice how the previous highs never came below each other. Every high here was higher, but in this case, instead of this market to go form a new high and protect this low, market actually shifted structure and took off that low. In this case, we see that there's already a shift. So that is the shift we are looking for after price has entered into our order flow. So now we got a break of structure right here, and we had a change of character. This is where price actually changed character. So there is already a shift in market structure. So this is what we want to observe. And now this has given a kind of confirmation to our order flow that yes, the order flow is actually going to hold price. And now since we have a change of character, we are good to say, okay, market has shifted structure and the bearish trend has actually started. The continuation of the bearish trend has started. Okay, so in this case, guys, we had market shifted structure this way. If you go to a lower time frame, this change of character must have happened around this place, right? Because the wick here is going to be a candlestick in maybe 1 hour time frame or 4 hour time frame. So although let's project this because we're in a daily time frame. Now on that time frame, we've already shifted structure. Then we need to look at the intermediate trend coming down. Impulse, correction, impulse to the downside, and we got a correction, we got another impulse. So we kept having it that way. That is how the market moves, guys, in fractals. And now something happened right here. We got this order flow. This order flow right here. That's the last series of buy candles, 1, 2, 3, that was responsible for a change of character right here. Of course, we had one of it right here before. Even if it is that one we are picking, it's still okay. We had one in that arena before. Okay, price didn't mitigate that, but we had another one right here. We had another one overlapping with the first. So here we can say that's an order flow, and we expect price to come, mitigate the order flow, and move immediately. So we didn't get that actually. Price did not come to mitigate that. Yes, so we can mark this as our supply zone actually, because there is a drop and there is a consolidation. So the entirety of this one to this place. So that is why you need to be versatile. You need to know what's really happening in the market. So now we got this as our supply zone right here, and that was exactly what price mitigated right here, as we can see. Now price mitigated the supply zone, and immediately price started falling, right? And now let's open up that arena to see what happened. There's this candlestick pattern, this one here, this shooting star candlestick pattern, and followed by a bearish candle. So there was a lot of rejection. What does this mean? It means that buyers actually flexed their muscles to the upside, and seller rejected that price. And immediately seller rejected that price. We could see it in all of this week, and another bearish candle followed immediately, which confirms that yes, the sellers are actually coming into the market, and the market is ready to actually respect that zone to start going down, as we can see. So, and exactly that was what happened. We are still on a daily time frame, guys. So we keep marking out our break of structure like that until we get to the last one. So we got a break of structure right here. This is a break of structure, and also we got another one right here, break of structure. We keep marking. So after the break of structure, we were actually having series of order flow that were yet to be mitigated. But now the one that is of utmost importance to us is this last break of structure. Let's pick this one as the last one that we got it. So I'm going to pick this as a BOS. So after the break of structure, we are expecting price to actually come retrace to the upside before going down. But before then, we need to identify the high that was responsible for this break of structure, and that's going to be here. That is the origin of the move that was responsible for the break of structure. So forget about this internal structure right now. Let's focus on, although this market was just like this to break this structure, fine, but the high that was responsible for this break of structure is not here, it's actually here. So all we just need to do now is analyze these ones too to know where price is possibly going to head. So now what do? We deal with the fractal nature now, that is the internal structure. So we have impulse, correction, and an impulse. So this is what I can see right here. So I have this move to the downside, I have this, and we have this. So now in this case, we need to see that market also broke an internal structure right here. We have a break of structure. I'm going to label that as BOS, but I'm going to use a dotted line to show that it's an internal structure. So we broke an internal structure here. Now, for every downtrend, the retracement or the pullback is always a uptrend. So the pullback that we had here is like an uptrend. This is an impulse, correction, and an impulse is an uptrend. But now we want to know when this uptrend is ending, and this is it. A break of structure, BOS here, and a change of character at the low here. So that's what we're going to be dealing with. So let's take this off right now. So we had a break of structure right here, and of course we had a change of character. Now, since we have a change of character, we need to see the high that was responsible for that change of character, and it was also responsible for the break of structure too. So now we need to see this level, this move, this swing high, this swing low, swing low. Okay, so that is the move that was responsible for the break of structure and also change of character. So now, also, we need to just be reasonable enough not to be too rational. In this move that came down, we still also observe an impulse, correction, and also an impulse. So if this be the case, we still had a break of structure, which is here right now. That's a break of structure. And now our swing point is actually on this high because price is still going down. You never can tell. Of course, price might possibly come here, and also at this top, we could observe series of buy candlesticks right here. These bullish candlesticks, we have a series of them like this, and that's going to be our OF. That's our order flow, right? So we got an OF there, and we push it forward because price might get into it very soon and react from that point. That is if they are interested in coming up here. Okay, so also we got this railroad track side as going to be our supply zone, guys. So this is our supply zone as we have here. So price might possibly come here or get to this OF for us to see a reaction. But we need to just be reasonable. We need to still work with the last break of structure right here. So reasonably, this is a break of structure, and the high that was responsible for that break of structure is here. So we had a high right here responsible for the break of structure. So this high is the most protected high right now, and we need to work with it. But of course, there are liquidities right above here. We need to know that. Yes, there are a lot of liquidity right above here. So price could come, take off those liquidity, and immediately start dropping. You could have that, or say extend to this level before coming down. That is still possible, but now we need to just work with what we have and what we can see right here. So now let's work with this last swing point. We had a swing high and a swing low, and price quickly is retracing this particular move right now. So internally also we had a break of structure. This is a BOS, and also we're going to use dotted line for that to represent an internal structure. And now since we had an internal structure, something significant happened here. There's this last candlestick here. This is going to be our order block. It's a candlestick that actually cleared liquidity before it and also led to a break of structure, and it was previously unmitigated and we had that break structure. So in this case, this is our order block or our point of interest right now. So I'll label this as an order block or our point of interest. So now we have a PO high here. So the question is price going to reject from this PO high? It's possible. So let me mark all of this as liquidity. That's liquidation. That's exactly what happened there. So we had liquidation here. So market stripped all of this liquidity and break structure, and the last candlestick that was responsible for that is this extortion candle, this spinning top candlestick. So let's navigate down to 4 hours to see what is happening right within here. So you can see that PO high actually house our order flow. We had an order flow here. So that PO high house our order flow, right? So now price is in there right now. The question is price going to break off this high and get into this level, or price is going to react from here and continue the downtrend? Those are the two things we want to start watching out for right here. So what do I do now? I will have to go down to 15 minutes and see what is happening in this structure, because that is very important to us. So now we can be able to look for a sell opportunity right within that level. Of course, it's not mandatory, because if price goes and take off this high, then we know they are either coming to the supply zone or they are coming into the order flow. So let's navigate down to 15 minutes to see what we have, guys. So on 15 minutes, we notice this pullback, price pulling back right now, and we are inside the daily time frame order flow. Point of interest. So now, don't forget that in a downtrend, the pullbacks are also uptrend. So if you look at this, we see that price has been breaking structure to the upside. We had a break of structure, BOS here. We had a BOS. So we have series of BOS right here. We have another one here. We have another one here. We had another one here, and we got another one, the last one here. So these are series of BOS that we have here, and we notice our price has been crawling up, so which is still talking about the bulls losing momentum. So the bulls are possibly losing momentum right here. As we can see, the market crawling up gradually. So here we had the last break of structure, and we are going to deal with this swing point right here. This is our last low. That's going to be our swing point. Yes, our swing low, and the top inside the other block is going to be our swing high. So price is already in a very important area, coming from higher time frame, coming from daily time frame. So all we just need now is the market to shift structure from this arena. So what we are possibly going to observe is price might possibly come and shift structure. Once this is done, then we are sure that price is possibly going to go down the more. So we just need a pullback into some sort of order flow right here before we start looking for a sell opportunity. So this is very important, guys. So this is what we are going to be watching out for on Australian dollar, US dollar. So if this happens, then we are going to take a shot from here and put our stop loss right above the high, and now we are targeting the low. Could be the 4 hours low as we have here. Do not forget that the function of a high is to take off a low. So now the function of this high, once we have a shift in market structure, the function of that high is to go and take off this low. So we are going to be targeting this low here. So also, before that, let's see how price created some sort of trendline liquidity right here. So we see a lot of trendline liquidity right here, and the price might possibly clear off all of this liquidity, and down we go from here. So, but if that did not happen, then market should come to the upper zone and for us to start looking for a sell opportunity. So anything can happen in the market, guys. So now let's keep our eyes on Australian dollar, US dollar, and we are going to be updating this chart very soon, guys. During the week, we are going to, possibly on Tuesday and Wednesday, these things should have happened. Then we are going to do a kind of review on it. Okay, so guys, if this is the kind of analysis you've always been wanting or you've always been clamoring for, okay, so don't hesitate to join our Telegram channel. It's going to be added to this. It's added to this this video already. So just go to my the link, click on our Telegram channel, join the Telegram channel, so that you'll be able to have access to most of this analysis and also put your own contribution as well. So this is very important, guys. So stay tuned, guys, and don't forget to like and turn off your notification bell, and also subscribe to this channel if you want something of this nature to keep occurring. Okay, so stay tuned, guys. We are going to be updating this Australian dollar, US dollar during the week. Stay tuned.